Well, while we're still waiting for everyone to log on, I want to take this opportunity to say thank you for joining me for today's webinar on U.S. News Media's September 2020 Statement Filing Overview. Before we get started, I do have a couple housekeeping notes. Due to the large audience and attendance, which is wonderful, I have put everybody on mute. However, if you do have any questions, feel free to enter them in the chat box and I'll address them offline. Also, like all my training webinars, this webinar is being recorded and I will be sending out a follow-up email that will include the webinar recording as well as a copy of the PowerPoint presentation. So let's begin. Oops, hold on one second here. So as you can see with the agenda, we have a lot of information to go over in a short amount of time. The primary focus of this webinar will be going over the recent approved newspaper simplification changes that primarily took effect for U.S. newspapers. The majority of the consolidation of reporting categories have already taken place for our Canadian newspaper reporting a couple years ago. So my main focus today, I'm going to do an overview of paid and qualified non-paid distribution and also talk about the consolidations that have occurred in these two categories. Same thing with digital unit reporting. I'm going to talk about digital reporting as well as the consolidations that have occurred for digital. Then I'm going to go into some of the metrics that have been eliminated for reporting and do a brief overview about COVID-19 reporting options, and then a real quick note about cross-media filing and brand view filing, as well as how you can update your brand view profile. And then we're going to go right into a live demo. So 2020 truly has been quite the year, and COVID-19 has had a major impact on all of us in both our personal and work lives. And most of us are now expected to do more with less. Over this past summer, AAM and its board of directors, publishing and media buyer committees met and took this opportunity to take a step back and to see where we could help simplify the reporting requirements for our publishing clients while still maintaining that level of detail that advertisers and media buyers want and need. AAM recently announced several changes to the news media audits and reports that aim to simplify the rules, simplify reporting, reduce record keeping, as well as modernize the audit while still delivering that valuable data that buyers would like and need. So let's take a look at the recently approved simplification highlights. First one is bylaws and rules. As most of you have known and have had the pleasure of reading our bylaws and rules, they were very detailed oriented. Now we have consolidated the rules into be more streamlined and consolidated. The next has to do with reporting, what information you report to AAM and how often. The next slide, I'm going to go in a lot more detail about this, but what happened is previously you filed quarterly data with us. You filed your quarterly zip code as well as your quarterly distribution averages. That has been modified. You are still going to continue to file your quarterly zip code. That has not changed. But what has changed is the reporting of your distribution averages. Instead of reporting your distribution averages for 3 months every quarter, you're going to report them on a 6-month basis. So on a biannual basis, you're going to report your distribution averages. The next has to do with non-paid circulation reporting, and this is where a majority of the consolidated reporting categories took place. In the past, U.S. publications had 2 major buckets to report their analyzed non-paid distribution. You reported it under either qualified and or verified. That has now changed, and all verified distribution is now reported in qualified. So we have one major reporting category for qualified distribution. Next has to do with the testing of non-paid distribution. In the past, when we've tested your non-paid distribution, in particular your sampling programs, whether it is home delivery or your retail sampling programs, we did a lot of in-field testing. Not saying that's going away. However, we have streamlined the audit process. Due to technology, we're able to streamline it, so do more of that testing remotely. Now, this slide is going to, has to do with the information you report to AAM and how often you report your information. We have quarterly reporting versus biannual reporting. So on the left-hand side, quarterly zip code data reporting, that has not changed. You will still continue to report your zip code information with AAM on a quarter basis. You will have March, June, September, and December. But what has changed is that in the past, in addition to when you file your zip code data, you also provided your distribution averages and information in detail for the quarter as well. That is what has changed. So I'm going to go over here on the right-hand side. We have the 6-month ending September and March reporting. What does that mean? So effective with September 20 filing, your statement period, when you file your averages, they're not going to be for the quarter. They're going to be for a 6-month time period. So it starts April 1st and goes through September 30th. You're going to report your distribution averages by frequency, by distribution type. Then you'll report your basic prices and then your any applicable explanatories. And you will then report your quarterly zip code. So for September, you're going to file your quarterly zip code for September. So back over here on the left-hand side, quarterly zip code data, that has not changed. Every quarter, you will continue to file your zip code data. But what you've noticed, and this took effect with the June 2020 zip code filing, that's all you filed was just your zip code information. You didn't file the level of detail of your distribution averages. The reason why is because June and December quarters, you just file your zip code data. Come over here for your 6-month filing, it's going to be 6-month March and 6-month September and 6-month March. You'll file your distribution averages in addition to your quarterly zip code. So your distribution averages are going to be based on 6 months. And then you will file your quarterly zip code. Just want to remind you that your zip code data is always housed in our Media Intelligence Center in the newspaper analyzer. And that distribution heat map that is in the BrandView profile, that is automatically updated with each quarterly release zip code report. Your 6-month distribution information, your 6-month media statement, is also going to be housed in a Media Intelligence Center. It's now, the PDF document will be housed in a section called Data Report section. This has been renamed. It used to be Quarterly Data Report. Instead, it's going to be a 6-month media statement. And as far as the detail elements of your distribution, you can also find that too in the newspaper analyzer. And then for BrandView, the circulation tab, that will automatically be updated with each release 6-month averages that you release. Now, the next few slides, I'm going to talk about paid print distribution and some of the changes that have occurred for paid. Just as a reminder, what paid distribution is for AM reporting is that as long as the end consumer paid at least 1 penny net of consideration for either the subscription or single copy sale, you can count that as paid distribution. So basically, when you take into account all discounts, all premium sales, the bottom line, at least 1 penny has been allocated for the publication. Whether it's a subscription sale or single copy, you can count it as paid distribution. Where one of the consolidation has occurred has to do with joint distribution. This has to do with newspapers that are in joint distribution agreement with each other. And for that type of distribution, there used to be a separate line item to report joint distribution. Now, effective September 20, your joint distribution agreement is now, you still report it, but instead of being in its own category, you're going to include it in home delivery. Next has to do with paid business traveler circulation. Just want to point out there is no change and the reporting of paid business traveler distribution. Just as a refresher, business traveler is made up of 3 components. You have group subscriptions. This is where a corporation or a company, they are purchasing the paper to be available for their staff. The other option is hotel distribution guest refund. What this is the hotel guest is paying for the newspaper. They're being billed for the newspaper in the hotel bill. But if they decide they do not want the newspaper, they're going to be given a refund. The next one is the most popular one, or at least it was prior to COVID-19, is the hotel distribution lobby copies. This is where the hotel is purchasing the newspaper for their guests and they're putting them in easy access areas of the hotel, such as the lobby. Now, these simplifications and consolidations of reporting categories that I'm going to be talking about throughout this presentation are more than just a cosmetic change in reports. There's a lot of work behind the scenes to make sure these changes are not only reflected in the PDF documents, but are also filtered into our database, which is known as the Media Intelligence Center, and our data feeds. AAM wanted to implement the consolidations and simplifications as soon as possible so our clients could benefit from these changes. Therefore, we are transitioning these changes starting with the September 20 filing period, with completion taking place March 21 reporting. So throughout this presentation, I'm going to go over how to report your distribution for September 20 and how it's going to look in transition for March 2021. So here, this is what I call a category map. And I will, in my follow-up email, you will have a copy of this full map that will include all the consolidation of categories. But what it does, it shows you what the categories look like prior to March 2020, what they're going to look like in September 20, and then how it's transitioning into March 2021. So as you can see for paid distribution, there really isn't any major changes from March 20 to September 20 to March 2021. Pretty much everything has stayed the same, with one exception, joint distribution. Joint distribution used to have its own line item. Now moving forward, effective with September 20 filing, is joint distribution is now going to be included in home delivery and mail. Same thing with March 2021. So here's a snippet of the filing tool. The filing tool shows here paid circulation and has your distribution for home delivery and mail and single copy sales. And it also has the different components for business traveler. Just as a reminder, home delivery, this equals your carriers, your motor routes, your mail, and joint distribution. And also too, as a refresher for single copy sales is made up of your dealers, your racks, your counter sales, and returns are deducted. The next few slides is where a majority of the consolidation of reporting categories has occurred. This has to do with qualified and verified distribution. Like I said in the past, publications to report your analyzed non-paid distribution used to report them in 2 major buckets. You had qualified and verified. Now, all verified distribution is now included and qualified to have one main category for your analyzed non-paid distribution. So what are the different distribution types you can report for qualified? We have home delivery address specific, home delivery market coverage, public access, which is one category that encompasses retail business, distribution to apartments, and racks and other distribution. And we have another consolidated category called other qualified. And this category encompasses employee copies, your education copies, and university copies. So let's take a closer look at this. The first one we're going to touch base on is qualified home delivery address specific. What this is made up of is your qualified, what used to be qualified home delivery requested and qualified home delivery targeted, now equals qualified home delivery address specific. The prior rules for home delivery requested and home delivery targeted have been simplified and consolidated to one rule called C1.1A. So the reporting and maintaining of home delivery requests and the 12-week minimum delivery has been eliminated. So what this boils down to for this category is that if you have a non-paid home delivery sampling program, it's being delivered to residential areas and it's address specific, meaning you know exactly where the paper is being delivered to. If the sampling program is more than 1 day, which most of them are, you're going to have the recipient is notified of the term and frequency and how to opt out. The next one has to do with home delivery market coverage. There has been no rule changes for this other than it's a label change because all verified distribution has been moved up into qualified. So what we did is verified home delivery is now reported under qualified, and it is a category that's been renamed to be home delivery market coverage. Again, this is your home delivery sampling program. It's going to residential areas. However, it may not necessarily be address specific, but it's the saturation of an area, such as a zip code, a subdivision, a neighborhood. And the publication is maintaining the detail level route maps to show where the distribution is occurring. So how are you going to report qualified home delivery for September 20, and what is it going to look like for March 2021? So here, prior to March 2020, under qualified home delivery, we had home delivery requested, home delivery targeted, and then under verified, we had home delivery. So for September, home delivery requested and home delivery targeted has been consolidated into one category. For September, you're going to report either requested and targeted in one category called home delivery targeted. Then in March 2021, home delivery targeted will transition to be labeled home delivery address specific. Verified home delivery, if you had any of that distribution, now it is going to be all verified distribution is now under qualified, and it has been renamed home delivery market coverage. So this is a new category for September 20, and it will be reported the same for March 2021. So here's a snippet of the filing tool. For qualified distribution for home delivery, you have two choices. You have home delivery targeted and market coverage. So remember, home delivery targeted for September 20 is a consolidated category now that encompasses home delivery requested and targeted. Then in March 2021, home delivery targeted will be relabeled and called home delivery address specific. And this verified home delivery, if you had any of that distribution, it is now reported under qualified, and it's the new category called home delivery market coverage. The next two categories I'm going to talk about have to do with other consolidation of categories. We have qualified public access. This one category encompasses these four components. So what used to be qualified retail business, event distribution, verified to deliver to apartments, and racks and other distribution is all combined into one category called public access. The next consolidation has to do with other qualified. And again, this is one category that encompasses three components. It's going to encompass your employee copies, your education copies, and if you had any university copies. All three components make up other qualified. So let's take a look at public access. Public access, like I said, is made up of these components for one category. So if you had any retail business copies, these are copies where a retail establishment has requested the paper to be available for their patrons, or if you have any free distribution to apartments that is an easy access for the residents and there's an opt-out notice instructions on each issue, or the catch-all, which was racks and other distribution. If you had any free distribution of newspaper via racks at non-residential locations, such as a bus stop, or the sampling papers that you have that you're handing out at the grocery store, or any distribution at events, any type of distribution, retail distribution to apartments and racks and other distribution will all now be categorized in one category called public access. So how is this transitioning from September 20 filing to March 2021? So prior to March 20, there used to be separate categories for all four of these categories. You had qualified retail business, and then you had verified distribution for delivered to apartments, events, and racks. So all four categories are now consolidated into one category for September, and you're going to report that as qualified retail business. Then qualified retail business in March will transition to be relabeled public access. So when you're filing, whether it's retail business, delivered to apartments, event distribution, or racks and other distribution, it's all going to be included in retail business for September. Then March 2021, it will be relabeled as public access. The next is other qualified. This is your employee independent contractor copies, education copies, and university copies. Again, all three components make one category called other qualified. So for employee copies, these are copies that you're made available for your staff, your carriers, independent contractors. They could have both a print and digital, but if they get both, that's great. But for AM reporting, you report the employee either under print or digital, but not both. Same thing for education copies. Education copies, these are copies that are going for students for classroom use or an accredited education program, one copy per student. And there's some supporting documentation from the teacher stating they requested the copies, they're going to be used for classroom use, and how many students they have, and how long they requested the papers to be delivered for. A teacher can request to have the paper to both print and digital, and that's great. But for AM purposes, you would report either print or digital for that particular student, but not both. And if they wanted digital, the teacher specifically has to request that they would like the digital edition. Same thing for university copies. University copies, for some of you that participate in this program, these are free newspapers that are in limited access that are specific for the college campus. They're targeted for the students and faculty. You're reporting net distribution for this particular category. And if you're having digital university copies, it's going to be based on access. So any three of these components, if you have employee, education, university copies, is now going to be classified as other qualified. So how is this transitioning for September 20 and March 2021? There used to be separate categories for education, university, and employees. All three of these are now been consolidated into one category starting September 20. So whether it's education, university, employee copies, you're going to report that as education copies for September 20. And then it's transitioning to the category other qualified in March. So here's the snippet of the filing tool. So again, here's education copies. And remember, it encompasses not only your education copies, but university and employee copies. And then in March, this will be relabeled as other qualified. The next consolidation has to do with zip code reporting. In the past, publications had the option to report detailed distribution by zip code, such as home delivery, single copy, and business traveler copies. Now this will be consolidated to report total only, and then verified and qualified had been consolidated into one category called total qualified. So you're still going to provide your quarterly zip code. You're going to break out your distribution by zip code. However, it's going to be total paid and applicable total qualified. Digital replica and non-replica remains the same. Digital replica or non-replica are not broken out by zip code. They're just included in a total. So you still showcase your digital, but it's just as a line item. It's not broken out by zip code. One of the other modifications that has occurred is the expansion of proration for prorating paragraph 3. This option used to be available for our clients that had distribution 25,000 or less. Now, this 25,000 and less has been waived. All publications, all circ size, can prorate paragraph 3. So if you have 100,000, 200,000 circulation or greater, you are eligible to prorate paragraph 3. So let's take a look at the proration requirements. So as long as you're not adding any new categories, there's no major changes in distribution, no new affiliated pubs have been added since your last filed zip code, and you're reporting at least one of your zip codes in the reporting, your audit period as an actual paragraph 3, you can prorate. So what you would do if you wanted to prorate, as long as you met the criteria, you'd still choose your paragraph 3 date. You still provide what your circulation is. But what the filing tool is going to do is take your circulation you provided for the paragraph 3 date and then calculate it against the previous filed zip code we have on file for you, and it's going to automatically populate your distribution by zip code by category. So it's just a quick option. If your distribution hasn't changed, it's just a quick way. Instead of manually entering in your information, it's just a quick way to enter your zip code. Next, I'm going to briefly talk about digital distribution and the consolidation. One thing you're going to notice is a lot of consolidation has occurred on the digital non-replica side. Instead of breaking out individual categories under digital non-replica, it's either going to be total paid or total qualified. So let's take a look. Just as a reminder for AAM reporting, AAM classifies a digital edition as basically it's taking your print product and putting it in a digital format. So it's going to have news content, your editorial content, and advertising. It could be a replica or non-replica version of your print. And if the digital edition has a different name, that's fine, but it does need to be reflected back on the main newspaper, either brought to you by or powered by. Also, too, for AM reporting for digital units, you have two choices. You have digital replica and non-replica. So digital replica, it's basically taking your print paper and putting it in a digital format. It's going to have the same editorial, basically same news content, and basically the same advertising. It's going to include your run of press advertising. However, it can exclude your freestanding inserts. Digital non-replica, on the other hand, it's still going to have that look of the print product, have the news and editorial content, but it may be a little bit more condensed and the advertising may differ. So digital non-replica will not include your run of press advertising. Next few slides, I'm going to talk about how you qualify your digital distribution, whether it's paid or qualified. The first one is the basic one. It's digital only. This means the consumer only paid for the digital edition. Nothing with print. It's only digital. So as long as the consumer paid at least 1 penny net of consideration for the digital edition, you can count that every day of the subscription term and count it as paid. For replica, it would be classified as paid subscription. For non-replica, you're going to include it in total average paid digital non-replica. This next slide has to do with a modification of a rule for incrementally priced. It used to be for digital incremental pricing, it was 5% incremental price. This has now changed to be at least 1 penny incremental pricing. So what does that mean? Let's take a look. So incremental pricing is when a subscription order provides both a print only and a print and digital option to the consumer, and that print and digital option is at least 1 penny greater than the print only option. It used to be it was 5% greater than the print option. Now it's down to at least 1 penny. So sign up today for a 3-month Sunday only print subscription and 7-day digital access subscription at the low price of $10.50, or sign up for a 3-month Sunday only print subscription at the low price of $10.25. So since the print and digital subscription was at least 1 penny more than the print only subscription, in this case it was 25 cents more, this offer will qualify as incremental pricing, and both the print and digital can be counted as paid circulation every day of the subscription term if they chose that print and digital option. So in this instance, for digital, you would include that in paid digital, whether it's replica or non-replica, you're going to include it in the paid section. The next one is the most popular type of digital offer that's out there. It's a bundled pricing. It's print and digital are offered together at one price, so at least one penny net of consideration, and there's no reference to being free. So sign up today for a 3-month Sunday only print and a 7-day digital access subscription at the low price of $5.99. So in this instance, the print portion is going to qualify as paid. You can count it every day to subscription term, and we're going to base it on payment. Digital portion, however, since the digital portion was not incrementally priced, you can only count the digital units as paid on the date of access. So this is where we're going to take a look at access files that you maintain for the subscriber. So the digital portion would be included still if it's digital replica or non-replica in paid subscriptions. Non-replica, it would be in the total average paid distribution. Next is if you are offering digital free and how to account for it. In order to be able to account it for digital unit as free, the consumer has to opt in and register and activate. And actually, when you count, in order for the subscription, and it's going to be based on access. So sign up today for a 3-month Sunday only print at $9.99 and receive free 7-day digital subscription for 3 months. So the paid portion would be classified as paid. However, digital is going to be classified as qualified because it was free, and it's only going to be based on access. So you can only count those digital units on the day the consumer accesses it. And for that reporting, for the digital side, you're going to report it under either replica or non-replica, and it will be under qualified opt-in subscription or total qualified circulation opt-in digital non-replica. The next has to do with other qualified, just like the print side. For digital, other qualified has consolidated these 3 components: employee, contractor, education, and university copies. So if you're reporting any digital copies for employees, education, and university copies, it is now one category called other qualified. So let's take a look on how we're going to report digital replica for September 20 and how it's transitioning from March 2021. So for digital replica, there's not a whole lot of change for the paid side. It remains the same. But just like print, what's changing is under qualified. For qualified digital, for digital replica, education, university copies, employees has been consolidated into one category. So for September 20, education, if you have education copies, university employee copies, you report it all under education. And then March 2021, it will be relabeled as other qualified. So here's a snippet of the filing tool. Yeah, it's description, single issue, and then you're qualified. And here's that education category. Again, remember, this is the consolidation of 3 components that make up education, university, and employee. And then in March 2021, it will be fully transitioned to be relabeled as other qualified. Digital non-replica, this is where a lot of consolidation has occurred. Not only when you used to report your non-replica distribution, you broke it down by digital platform, whether it's restricted website, an e-reader, a tablet, or mobile smartphone. Now, you're just going to report either it's total digital non-replica paid or it's total qualified digital non-replica. You're not going to report it by digital platform, and you're not reporting it by individual categories. So, effective with September 20, this has gone into effect. So what you report for September 20 is the same for March 2021. If you have any digital non-paid replica, if it's paid, it goes in total digital non-replica paid. If you have any qualified non-paid digital replica, it's going to go in total digital non-replica qualified. This next slide goes over some of the reporting metrics that have been eliminated. One has to do with zonal reporting. So some publications, when you reported your distribution averages, you also selected the option to break it down by market, whether it was your NDM, ONDM, retail trading zone, city zone, etc. Zonal reporting is no longer going to be an option. All distribution is just going to be reported by distribution type and in total market only. Unique subscriber percent. This is for publications that have affiliated publications. It used to be that you had to report the unique subscriber percent in the explanatory section of the report. This has now been eliminated. You no longer had to report unique subscriber percentage. The next one is reporting credit and grace copies. This is also known as the 4% allowance. 4% allowance, you're no longer going to be reporting that either. The last one has to do with age of source of request. This had to do with your analyzed non-paid home delivery requested distribution. Since we're not looking at request anymore, we don't need to look at the age of the request. So age of source of request is no longer being reported. This next slide, I'm just briefly going to touch base. Due to COVID-19, AM announced various accommodations earlier this year for you to report your distribution, and those accommodations have been extended through March 2021 reporting. So for September 20 filing, one of the things you can do is for adjust the report start date. So remember, when you're reporting your 6-month averages, your distribution averages, it's for a 6-month time period. It begins April 1st and goes through September 30th. However, if you were really impacted by COVID-19, you can adjust the start date to be June 1st. And it'll be June 1st through September 30th. It will still be classified as a 6-month news media statement, but it will contain an explanatory about the curtailed reporting period was due to COVID-19. The other option is omitted days. For omitted days, this is days that you actually published, but the distribution was so low you don't want to include it in your averages. So the rule is that you can omit a day, a particular day, if the distribution is 5% above or below the previous corresponding week. Also in the rule, it was that you couldn't eliminate more than 10 days per year. Well, that 10-day limit has been temporarily waived for the time being. That went into effect March 9th, and it's going to go through March 21st. Now, before I go into my live demo, I do want to just touch real quick here about cross-media reporting. So for our clients that report their distribution, get the full picture of where their distribution is occurring, not just for looking at your digital units, but looking at your digital activity, looking at your website activity, your web traffic, your page per views, unique browsers, or social media such as Twitter, your followers, or Facebook likes, or your e-newsletter information is all classified in cross-media reporting. And I just want to point out that in the filing tool, the cross-media media data is always available for you to update. That never closes. Same thing with editing your brand view profile. You can edit your brand view profile at any point in time. So I just wanted to point that out. And also, too, as a reminder about BrandView. BrandView is free. It's a free interface that allows you to customize your information in our database, which is the Media Intelligence Center. It allows you to do an overview page, put in graphics, explain your publication, even include a link for your media kit. Your BrandView profile is going to be automatically updated with each released 6-month news media statement. The zip code distribution heat map is automatically going to be updated with each quarter zip release. And you're going to have a unique link that's unique for your publication that you can share with anybody, even if they're not an AM client, they would still have access to your BrandView profile. So it's a great marketing tool. It's free. Highly recommend that if you haven't completely built out your BrandView profile, that you do. And if you need help, just let me know. So now I'm going to get out of my presentation real quick and I'm going to switch over to a live demo of the filing tool. So here I'm on AM's main website, and our main website that we have here is has been revamped. Here you're going to click on Login. When you click on Login, you have two choices. You have Media Intelligence Center and the Publishing Filing Center. So all your release data, your 6-month averages, your quarter zip code reports are going to be housed in the Media Intelligence Center, and you have access to this information 24/7, not only to your information, but to any other client's released information as well. And just a reminder, your zip code data is included in the Media Intelligence Center, but it's housed in a newspaper analyzer. And we'll have a separate webinar regarding location and how to access your information on the Media Intelligence Center later on this within the next month. But what I'm going to focus on is the Publishing Filing Center. So I'm going to go ahead and click on that. And it's going to take in a moment here. And I'm going to go ahead and log in with a publication. And again, this publication I'm using is just purely for example. And if you're not sure what your credentials are, just let us know and we'll provide those credentials for you. So I'm going to go ahead and click log in. And when you log in, you have some more options. So remember, when I just touched base, cross-media media data and your edit your brand view profile are in the filing tool. And that is available for you at any point in time. But what I'm going to be concentrating on is how to file your circulation claims. So I'm going to go ahead and click on September 2020. And if you notice right off the bat, the introduction, this has been updated. And I do want to point out that in our tutorials, there's an updated filing guide. And also, I'm going to click on this link for the news media category. And when you click on that, it's going to show you what I've been using throughout my presentation about what the reporting categories were, what they're going to be for September, and how they're transitioning for March. So just to let you know, that's a great resource for you to look at when you have an opportunity. But what I'm going to focus on now is the starting point. We're going to go into the survey. So the first question it wants to know is what type of distribution are you going to be reporting? Do you have print? Do you have digital? Do you have digital non-replica? If you don't select a particular category, what's going to happen, it's not going to show up in the filing tool. So in my example here, I'm going to change this back, saying yes. I'm going to check that, and now I have all three are going to be shown in the filing tool. The other thing in the survey, it's going to ask for your contact information, but there's also two save features, and every section of the filing tool has a save and continue. So if you get anything out of my webinar, just remember to save and save often. Next is the main edition pub plan. So when we go into the main edition pub plan, it's going to show you that the date range is April 1st through September 30th. So remember, you are not filing quarterly distribution averages. You're going to be filing 6-month averages. So the start point is going to be April 1st through September 30th. We do have some publications that are on a fiscal calendar, and so you can adjust the end date by clicking on the red calendar box and then selecting the end date that's applicable for you. But most publications are going to be April 1st through September 30th. One thing, though, to keep in mind is if you're taking, if you have, due to COVID-19, if you need to modify the start point, you can. Just hit the calendar box, and then you can adjust it to June 1st. If you do that, keep in mind, we're still going to classify it as a 6-month statement, but there will be an explanatory about the curtailed reporting period was due to COVID-19. But for my example, I'm going to go ahead and leave it as a 6-month time period. And remember, you are filing your distribution averages for 6 months, not by quarter. The publishing plan here is just to indicate what frequencies you published. So this has changed, let us know so we can update this for you. Next is the non-publishing day. So non-publishing day means you just didn't publish. So what you do is hit the plus icon, and then you bring down the calendar box, and then you put in what your non-pub day is. If you decide, oh, I only had the one, just go ahead and click the red X, and that will delete it. I went ahead and put in September 7th as my non-pub day. Again, days omitted from averages, it's the same concept, but what days omitted averages are is that you actually published, but you don't want to report that distribution because it was really low. It was at least 5% lower than the previous corresponding week. That 10-day limit for omitted days has been waived. So if you have any omitted days, go ahead and just click the plus icon and click the calendar box to select your omitted days. Once you made your have updated, if you had to make any updates, some don't have to do anything with this page, but if you have any non-published days, go ahead and add it, and then remember to save. So I'm going to go ahead and click save, and it says successfully saved. The same thing you're going to do for affiliate pub plan. So I'm going to click on affiliate pub plan, expand my yes, your essential shopper, and it shows your frequencies, and you can also do non-publishing days and omitted days for your affiliate pub plan. Now we have reconciliation of days. And this, again, you're not going to do anything with this particular section. However, I do recommend that you look at it, because when you click on your publication, and it expands it to show you the days that the filing tool is going to use to calculate your averages. So for that, back on the main edition pub plan, I put in September 7th as a non-pub day. So what the filing tool did, it took that there was a possible 26 days, it subtracted the non-pub day, and now it nets down to 25. You want to make sure that these net days match what's in your circulation report. So you're using a circulation report to report your distribution, so you want to make sure those tie. And the same thing with your affiliated publication. Now I'm going to go enter in your paragraph 1 information. This is where you're going to put in your distribution by averages. Again, this is for your 6-month time period. You're going to report net totals, not averages, for paragraph 1. So you don't want to put averages here. You're going to put in the totals, and it wants to be net, meaning you're going to deduct returns for single copy. Also, too, we just kind of, what I've gone over in my PowerPoint presentation, we have summarized here about the consolidated reporting categories. Again, you can click on here if you want to get the full picture of the categories. You can click on the category map. But also, just as a reminder, all verified is now reported and qualified. Qualified home delivery equals qualified home delivery requested and targeted. Your qualified education equals employees, education, university copies. Qualified retail business equals your retail business events, distribution to apartments and racks and other distribution. And verified home delivery has its own new category called qualified market coverage. The next section is basic prices. This is being pulled over from the last one we had on file for you. If you have any updates, just go ahead and highlight it and update it and click Save and Continue. Then we have explanatory. If you have any explanatories, if you need additional ones, click on Add Explanatories. Take a look at what we have, and then we also have miscellaneous, which is a catch-all. Next, I'm just going to talk real briefly about the zip code. So add zip code, this is where you're going to report your quarterly zip code information. So for September, you're going to report your September quarter zip code information, where paragraph 1 is your 6-month information, and then zip code is based off your September quarter. So when you're selecting your paragraph 3 days for the very first time, you'll click on Add New Paragraph 3. But if you need to edit your paragraph 3, just go ahead and click Edit. And what it's going to do is you're going to get the paragraph 3 survey page. The very first thing you're going to do is select your paragraph 3 dates. We ask for that you choose a represent Sunday and a represented daily date. So for the September quarter, you can go ahead and select your Sunday and use the red calendar box, and I'll drop down and select your Sunday, and the same thing for daily. It's also asking for a pub code, and the pub code is mandatory for you to put in. It could be just the initials of your publication. However, if you are uploading a zip code file to populate the zip code information, your pub code needs to be exactly what your file you're uploading. Just to let you know, for those that are uploading a zip code file, the specs have been updated. So I'm going to click on this real quick to show you the instructions. You can upload your zip code file. You're going to convert your Excel file into a CSV file, and it has to be in this format in order for it to upload correctly. The next thing you're going to notice is the paragraph 3 categories are just pretty basic. You have total paid, your qualified, your digital replica, and non-replica. Remember, replica and non-replica are just in totals. Paid and qualified, you're going to break down that distribution by zip code. This next question has to do you want to prorate? Again, remember, all publications, U.S. publications, regardless of circ size, have the option to prorate. And as long as there's been no major changes, no affiliate publications, we do ask that you do provide an actual paragraph 3 once an audit cycle, but otherwise you can prorate. I went ahead and checked yes. Now I have these 2 boxes here. I'm going to go ahead and click Circulation Record Totals. When I do that, it's going to ask for what is your distribution by paid, qualified, digital replica, and non-replica for the paragraph 3 dates. You fill that in. And once you do, go ahead and click on zip code data entry. And what's going to happen is, it does take a moment for it to load, so you have to be a little patient. But it does come up, and it has your previous zip codes that you've had on file. It carries over your circulation record totals. And then you can start entering in your distribution by zip code for paid and qualified. And then digital replica and non-replica, you're just going to put as a total. Now, if you notice here, there's differences. You want to make sure that when you submit your paragraph 3, there are 0 differences between your circulation record totals and what you've entered in for zip code. If you want, instead of manually updating this and entering this, and you haven't uploaded a file, you can prorate. So click Calculate Proration. This button came because I said yes to the proration in the survey page. If I click on this, what it's going to do, it's taking your circulation record and calculating against the previous one we've had on file, and it will automatically populate this for you. So it's a time-saving feature. Once you complete both frequencies, you can export it to Excel to save it and have it as backup, and then ready for submission. Ready for submission will submit just the paragraph 3. So we have a 2-step submission process for the 6-month averages and your quarterly zip code. Once you submit paragraph 3, go back into the filing tool, and you're in the final stages. So I'm going to go under Review and Submit, View Quarterly Data, or actually, sorry, I had to get used to that myself. So it's View Data. And here, if I expand paragraph 1 calculated averages, it's basically, it allows you to proof your information before you submit it. So when I entered that distribution in paragraph 1, this is what it calculated my average to be. So I put in 200,000 and it averaged it out based on the number of publishing days to be 7,692. You're like, oh, that's not what it's supposed to be. Go back into paragraph 1 and make your adjustments, save it, and then this will recalculate. Once you're satisfied with everything, highly recommend you take this print icon and either print out the information because it'll print out everything you've entered, or you can save it as a PDF by changing the destination and from a printer to save as a PDF. Yeah. Once you are done with everything is fine, you're going to go into Final Step Submit. You're going to put your name, your title in the box, and check the box below. This is your electronic signature. And then right now it's in red. It's saying I haven't submitted my paragraph 3, but let's assume I submitted my paragraph 3. You'll see a blue button saying submit your file, and that's what you want to do. So that's the filing tool in a nutshell. That's a lot of information we went over in a short amount of time. So I do want to point out that the filing tool is now open for you to submit your 6-month numbers, so your 6-month averages and your quarterly zip code. The due date is November 12th for dailies, weeklies, and your quarter's zip code. If you have any questions about the information that was discussed in this presentation, or any filing questions, feel free to reach out to myself. We have Tim or Shelley or Rebecca, and we're more than happy to help you with any of your filing questions. Thank you so much for joining me for today's webinar, and have a great day.